to have the launch ceremony of the global PGM Yearbook 2023 and China Platinum and Palladium Yearbook 2023. Let's give the floor to Nikos Kavalis from Metal Focus.
Welcome to Shanghai Platinum Week and to Metals Focus Yearbook launch. I'm Nikos Kavalis, founding partner and managing director of Metals Focus, based in London, but with presence in a number of markets, including Shanghai. We have an office here, and I'm honored to be invited here to speak at this really amazing event. And I'm particularly excited because this is my first visit to China since the pandemic, and this is someone that used to come to China every almost 6 weeks, 5 to 6 weeks, and suddenly for 3 years I wasn't here. So I really missed it, and I'm extremely excited to be back and look forward to continue visiting frequently and spending time with old friends and clients and partners. So I would like to thank the organizers for putting this event together and for inviting me here to speak. Special thanks goes to the WPIC, which is a huge supporter of Metals Focus. We work very closely with them, particularly in their Platinum Quarter publication, which I think is game-changing in the platinum market. And of course, special thanks also goes to our old friends and partners in China, China Gold Association. We've been working together pretty much since we started, and their support is huge in helping us launch a lot of our yearbooks, including the one that we're launching today, the Platinum Group Metals Yearbook Edition 2023. I will go through the key findings of the report after I say some warm thanks to our sponsors, particularly the front page sponsor, PAMP, thank you Bernie, but also all the other sponsors of the report. So there was one big theme in 2022 that affected all Platinum Group metals, and that was the weakness of PGM supply. In 2022, we saw severe disruptions, particularly in South Africa, and this resulted in almost all major producers, in fact, all major producers, apart from Norilsk Nickel, failing to meet their production guidance. South African producers in particular faced major headwinds, which had particular impact on platinum and rhodium output. Palladium less so because of the support that Russia gave. One of the key factors weighing on South African mine production has been the energy crisis that has been weighing on the country. I'm sure a lot of you have heard of Eskom's problems, and what we've tried to do here is try to plot the severity and the evolution of the energy crisis. It is important to stress a point here. In the news, we hear a lot about load shedding in the country, which is basically production or electricity supply being taken offline. It is important to stress that when it comes to South African miners, they fall under a distinctly different regime, which is one of Lord curtailment. So they're basically asked to reduce their electricity consumption rather than actually being switched off. And this is because of their importance to the economy. Because of this idiosyncrasy, in 2022, while electricity supply was a headwind, the impact of it on actual ounces produced was actually quite limited. Still, the situation is getting a lot worse this year, so the effect we expect will be worse, and crucially, this creates perpetual downside risks to production. So if we look at platinum production in some detail, global supply fell by more than 10% last year. In South Africa, in addition to the energy troubles, production was also affected by safety stoppages, supply chain disruptions, social unrest, cable theft, as well as severe rainfall during part of the year. The percentage drop was also amplified by the fact that if you look at the 2021 bar, you can see that the figure was exceptionally high, and this was due to the fact that there had been some accumulation of pipeline materials in 2020, which were released very quickly in 2021. So this amplified the percentage drop from 2021 to 2022. We expect global mine supply to be pretty much flat this year and significantly below pre-pandemic levels. And energy troubles, lower grades at key mines, as well as some closures will pretty much offset the positive impact of improved processing capacity in South Africa. It wasn't just mine production that was weak last year. Recycling was also under pressure. It fell by 19% to a 7-year low. And this was mainly due to auto catalyst recycling falling by more than a fifth. Now, these themes that I will cover here really apply to platinum, palladium, and rhodium, but factors weighing on auto catalyst recycling were the chip shortage crisis, limiting the ability of consumers to buy new cars, and therefore, by implication, limiting the supply of old cars. Basically, this situation has forced cars to stay on the road for longer. The hangover from the pandemic is also another factor. People are commuting less, so they need to replace their car less frequently. And in some cases, weaker prices, particularly of palladium and rhodium, falling prices of palladium and rhodium resulted in scrapyards holding on to stockpiles. This year, we forecast almost no change in platinum recycling, again reflecting all these factors. Now let's turn to demand. And auto catalyst demand has been a huge success story for platinum in the last couple of years. And in 2022, we saw a 13% jump in demand, taking it to levels higher than before the pandemic, in fact. And there were three big factors really in order of importance. Number one, I would say, is the strength of the heavy-duty sector. So higher loadings of platinum in trucks and buses around the world, particularly because of Asian countries upping their emissions limits legislation. Second factor, substitution. So we have been seeing, because of the price advantage of platinum versus palladium, we have been seeing a switch from palladium into platinum in gasoline auto catalysts, and that certainly gathered momentum last year. And the third factor was hybridization. A larger share of internal combustion vehicles that are rolling off the production line are now hybrids, which require higher loadings of PGMs because of the whole constant cold starts, the fact that the engine keeps switches on and off, and therefore the temperatures at the catalyst are lower. Offsetting this increase in auto catalyst demand was lower glass consumption. This was not surprising. In 2021, we had an exceptionally high glass figure, and the cycle of investment tends to be that after a very strong year, you have a weaker one, so hardly surprising and hardly a concern. Jewelry was also lower, and we'll talk about that in the next slide in more detail. For 2023, we expect another double-digit increase, mainly driven by auto catalyst demand, and again, because of these three factors that I mentioned earlier. We also see a decent recovery on the glass side, and interestingly, although jewelry remains very weak, our 2023 forecast is the highest demand figure since at least 2010. Now, let's look at jewelry. Look, jewelry remains disappointing, and we had a 3% decline last year. We expect another 2% decline this year, and this is notwithstanding the wider Chinese jewelry industry's recovery after COVID, and notwithstanding the fact that if you look at the yellow line on the chart, gold is actually doing quite well this year. So why is platinum suffering? I think the main reason is competition from gold, really. First of all, there is a cultural preference, or like a fashion preference at the moment, for yellow designs. Related to this, in the last few years, there's been a shift within Chinese jewelry, attention towards products, designs that have a distinctly Chinese cultural, let's say, character. And frankly, they look better in gold, whether we like it or not. One final issue, which I think the industry could do something about, is the fact that there is quite a big gap between the buying price and the, let's say, selling back price of platinum in jewelry stores, which makes consumers feel that they're, losing out too much when they, go and exchange their old jewelry for new, or when they decide to sell out and do whatever else they need to do. Still, the strong gains from other areas of demand is pushing the platinum market into a really quite substantial deficit this year. And it's important to note that we think this is the start of a new era for platinum. We think the market will be undersupplied for the foreseeable future. Palladium mine production experienced a more modest decline than platinum, only 6% drop, and this is very much because of Norilsk Nickel's strength last year offsetting the losses from South Africa. It's important to stress here that Russia's invasion of Ukraine and the resulting sanctions have not materially affected Russian supplies yet. In contrast, in 2023, we think palladium will underperform. Palladium supply will underperform platinum. We see a bigger drop. We actually see a drop rather than the flat profile we showed for platinum. Russian production is expected to fall by 10% because of mainly because of smelter maintenance. I should also point out that although we haven't seen sanctions directly affecting Russian supplies, there is an indirect effect. Russian producers have to find new logistics routes. It's tough for them to buy consumables or to engage service providers, and all these factors will over time affect supplies from that country. Palladium supply also scrap supply also fell sharply last year. Same factors that we mentioned earlier relating to the chip shortages, etc., affecting supplies. And we also see a pretty poor outcome for this year. Palladium auto catalyst demand was quite disappointing last year. It was more or less flat compared to the previous year, which was historically low. Automotive production did increase. However, that increase was, let's say, capped or limited by the chip and other part shortage crisis that we had over the year. Offsetting these gains in automotive production, however, were two key factors. Number one, the battery electric vehicle penetration. Number two, substitution. As we noted earlier, it was a positive for platinum and it's a negative for palladium. Gasoline after-treatment systems have been gradually seeing some shift from palladium to platinum. 2023 is also disappointing. Less than 1% increase is expected. It's even though the chip shortages are easing, the other factors that we mentioned earlier are basically really hitting palladium demand. And this is not the only disappointing sector for palladium consumption. Electronics and dental, for example, are also suffering immense pressure. This is because of the historically very high palladium price fueling substitution pressures. So palladium moved back to a deficit last year, and after its first surplus in a decade, and we expect it will remain in a deficit this year. Now, those of you that follow prices will naturally be surprised. I mean, if you are seeing deficits, why are prices performing so poorly? We have to remember that there are significant above-ground stock levels of palladium, and while 5 years ago the positive underlying fundamental situation for the market meant that investors were keen to keep those above-ground stocks, the situation has changed. The outlook for palladium is really bad on the next 5 to 10 year horizon, and as a result, those that own those stocks are no longer keen to hold them, and we've seen massive liquidations, certainly in China, but also in the other parts of Asia, of above-ground inventories that are pushing prices down. Let's spend a bit of time looking at rhodium quickly before we summarize we finish off with our price forecast. Rhodium mine supply suffered the greatest losses, very obviously because of its huge exposure to South Africa and the problems that country had. And similar to platinum, we expect it will be unchanged this year. Again, recycling also under pressure for the same reasons we've covered on platinum and palladium. Now, rhodium autocatalyst fabrication grew by 4% last year. Higher light vehicle production offset the pressures from electrification. And you will notice that rhodium did better than palladium did, and this is because it didn't have the same substitution pressures that palladium was faced with last year. Now, while substitution is not happening, at least not in a big way for rhodium, thrifting is, and this is why we have a slight decline forecast for this year's demand. Glass, however, is the big problem for rhodium. Glass manufacturers, as many of you know, have been switching because of the high rhodium price, have been switching to alloys that have more palladium and less rhodium. And particularly because glass fiber equipment has to be changed quite regularly, typically every year. When these changeouts have been happening, as we were switching to a lower rhodium alloy, we've ended up having excess metal, which the industry has sold back to the market. And this resulted in the glass industry becoming net sellers of rhodium last year and probably likely to be again this year. Some support is offered by the chemical sector, which we expect will rise strongly this year. And it's because of this that we see the market returning into a small deficit. Now, prices. Naturally, given platinum's deficit, we have to be optimistic, and this pushes us to be optimistic about the price. And we see a 7% increase in the annual average to just over $1,000 an ounce. It's important to stress here that we only see such a modest increase in platinum prices because of the offsetting or the negative effect that the gold price will exert on platinum. Market expectations have already been adjusted to see rate cuts not happening until next year, but we think there is more adjustments to come. And as a result, we think gold will come under pressure in the second half of this year, and naturally this will affect platinum. Although we forecast a deficit for platinum, the points that I made earlier about the above-ground stock releases will continue to weigh on the price, and we expect the price to drop by 28% year-on-year to just over $1,500 an ounce. Finally, similar to palladium, rhodium's weaker long-term fundamentals, and particularly the immense release of above-ground inventories that we've seen are really taking a massive hit on the price. So we see a more than 40% drop to an average price of around $9,000 an ounce. But do keep in mind that this is still more than 5 times higher than the average over the 2010s. So it's still a pretty expensive rhodium price. And with this, I would like to thank you all for your attention. I would like to invite you all to follow us on WeChat to keep in touch with what we're doing, and of course get in touch with us if you would like any help. And once again, many thanks to our hosts for this great event and for giving me the opportunity to present here. Thank you very much.